The rise of Bitcoin, a digital gold rush. In the annals of financial history, few innovations have captured the world's imagination quite like Bitcoin. Born in the aftermath of the 2008 financial crisis, this digital currency has evolved from a niche experiment to a global phenomenon. Its creator, the pseudonymous Satoshi Nakamoto, envisioned a decentralized monetary system free from the control of central banks and governments. This vision resonated with millions worldwide, sparking a digital gold rush unlike anything seen before. Bitcoin's journey has been nothing short of remarkable. From its humble beginnings trading for mere cents, it has skyrocketed in value, reaching peaks that have made early adopters millionaires. But beyond the price speculation lies a revolutionary technology: blockchain. This distributed ledger system ensures transparency, security, and immutability of transactions. Major corporations, institutional investors, and even nations have begun to embrace Bitcoin as a legitimate asset class. El Salvador's bold move to adopt Bitcoin as legal tender in 2021 marked a watershed moment, signaling the cryptocurrency's potential to reshape global finance. As we delve deeper, we'll explore why this digital asset could be your key to financial sovereignty in an increasingly unpredictable economic landscape. Fiat currencies, a history of collapse. To understand Bitcoin, we must first look at the history of fiat currencies. Fiat money, backed by government decree, has been the global standard. History is filled with examples of fiat currencies collapsing due to mismanagement.
From the German mark to the Venezuelan bolivar, unchecked money printing leads to disaster. The flaw of fiat currencies lies in their unlimited supply. Central banks can print money at will, leading to devaluation over time. The US dollar has lost over 96% of its purchasing power since 1913.
The cycle of fiat currency collapse follows a predictable pattern. Excessive government spending leads to budget deficits. Governments print more money, leading to inflation and collapse. Bitcoin's fixed supply, the digital scarcity revolution. At the heart of Bitcoin's revolutionary potential lies its fixed supply. Unlike fiat currencies that can be printed at will, Bitcoin has a hard cap of 21 million coins. This scarcity is programmed into its very DNA, creating a level of predictability and transparency unseen in traditional financial systems.
The mechanism behind Bitcoin's fixed supply is ingenious. New Bitcoins are created through a process called mining, where powerful computers solve complex mathematical problems to validate transactions and secure the network. However, the rate at which new Bitcoins are created halves approximately every 4 years, in an event known as the halving. This process ensures that the supply of new Bitcoins gradually decreases over time, mimicking the extraction of precious metals like gold. With Bitcoin, anyone can verify the current supply and predict with certainty how many Bitcoins will exist at any point in the future. This transparency eliminates the uncertainty and potential for manipulation that plagues traditional monetary systems. It's this certainty that has led many to view Bitcoin as digital gold, a scarce, durable, and fungible store of value for the digital era.
Bitcoin ETFs, opening doors for institutional investors. The advent of Bitcoin ETFs, or exchange-traded funds, marks a significant milestone in the cryptocurrency's journey towards mainstream adoption. These financial products allow investors to gain exposure to Bitcoin without the complexities of directly owning and storing the digital asset.
For institutional investors, who often face regulatory constraints and operational challenges, Bitcoin ETFs provide a familiar and regulated avenue to participate in the cryptocurrency market. This development has the potential to unleash a flood of institutional capital into the Bitcoin ecosystem. The approval of Bitcoin ETFs by regulatory bodies like the U.S. Securities and Exchange Commission represents a seal of legitimacy for the cryptocurrency. It signals a growing acceptance of Bitcoin as a legitimate asset class, worthy of inclusion in diversified investment portfolios. For many institutional investors, this regulatory clarity removes a significant barrier to entry. It allows them to allocate funds to Bitcoin exposure without the need to navigate the often complex world of cryptocurrency exchanges and digital wallets.
The impact of Bitcoin ETFs extends beyond mere convenience. These products create a more efficient price discovery mechanism for Bitcoin, potentially reducing volatility and increasing liquidity in the market. As more institutional money flows into Bitcoin through ETFs, it could lead to a more stable and mature market. Section 5. Bitcoin versus tech giants, a new investment frontier. When considering Bitcoin as an investment, it's illuminating to compare it to some of the most successful tech companies of our time.
Giants like Apple, Amazon, Facebook, now Meta, and Google have reshaped our world and created enormous wealth for their investors. However, Bitcoin offers a unique value proposition that sets it apart from even these tech behemoths.
Unlike company stocks, Bitcoin represents a decentralized network and a new form of money, with potential applications that extend far beyond any single company's reach.
One key difference lies in the potential for growth. While tech giants have already achieved massive market capitalizations, Bitcoin is still in its early stages of adoption. The total market cap of Bitcoin, even at its peaks, remains a fraction of these tech companies. This suggests significant room for growth as Bitcoin continues to gain mainstream acceptance.
Moreover, Bitcoin's fixed supply means that increased demand can only be met through price appreciation, potentially leading to exponential growth in value.
Another crucial distinction is Bitcoin's role as a global, borderless monetary network. While tech companies are subject to regulations and potential breakups by governments, Bitcoin operates beyond the control of any single entity.
Section 6. The power of 0.1 Bitcoin, your ticket to financial freedom. Owning 0.1 Bitcoin holds profound significance in the context of Bitcoin's fixed supply and potential for appreciation.
With only 21 million Bitcoins ever to exist, owning 0.1 BTC puts you in an exclusive club. It represents 1/10 of 1/millionth of the total supply.
In a world of 8 billion people, not everyone can own this much Bitcoin.
The power of 0.1 Bitcoin lies in its scarcity and potential for appreciation.
Section 7. Bitcoin in 2024 to 2025. Predictions and possibilities. As we stand in 2024, the future of Bitcoin looks more promising than ever. The past few years have seen significant developments in both technology and adoption, setting the stage for potentially explosive growth. One key factor to watch is the next Bitcoin halving, expected in 2024. This event, which reduces the rate of new Bitcoin creation, has historically been followed by bull markets. The reduced supply, coupled with increasing demand, could lead to substantial price appreciation. Regulatory clarity is another area where we're likely to see significant progress in 2024 to 2025. As governments and financial institutions come to terms with the reality of cryptocurrencies, we can expect more comprehensive and supportive regulatory frameworks. This could pave the way for greater institutional adoption and integration of Bitcoin into traditional financial systems. Countries may also follow El Salvador's lead in adopting Bitcoin as legal tender, particularly those struggling with weak national currencies or seeking alternatives to dollar dependence. Technological advancements will continue to enhance Bitcoin's utility and scalability. The Lightning Network, a second-layer solution for fast and cheap transactions, is likely to see wider adoption, making Bitcoin more viable for everyday transactions. Section 8. The philosophy of wealth building in the digital age. Building wealth in the digital age requires a fundamental shift in mindset. Traditional models of wealth accumulation, often tied to physical assets or fiat currencies, are being challenged by the rise of digital assets like Bitcoin. This new paradigm demands a reevaluation of what constitutes value and how we can preserve and grow wealth in an increasingly digital world. At its core, this philosophy embraces the principles of decentralization, personal responsibility, and long-term thinking. Central to this new wealth-building philosophy is the concept of digital scarcity. In a world where digital information can be infinitely copied, Bitcoin introduces the idea of digital assets that cannot be duplicated or inflated at will. This scarcity, combined with Bitcoin's decentralized nature, creates a unique store of value that's resistant to the erosion of purchasing power often seen in fiat currencies. Embracing this concept requires a shift from short-term, speculative thinking to a long-term perspective focused on preserving and growing wealth over decades. Another crucial aspect of this philosophy is the emphasis on personal responsibility and sovereignty. Unlike traditional financial systems where banks and governments act as custodians of your wealth, Bitcoin puts you in complete control of your assets. Section 9. Navigating regulatory waters. Bitcoin's legal landscape. As Bitcoin continues to gain mainstream adoption, its regulatory landscape is evolving rapidly. Understanding this changing legal environment is crucial for anyone looking to invest in or use Bitcoin.
In 2024, we're seeing a global trend towards more comprehensive and nuanced cryptocurrency regulations. Many countries are moving away from blanket bans or ignorance, instead developing frameworks that aim to balance innovation with consumer protection and financial stability.
In the United States, the Securities and Exchange Commission and the Commodity Futures Trading Commission have taken leading roles in shaping Bitcoin regulation.